Michael Carnaval is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnaval and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice. Well, hi everybody. It's another Conversations With, and with me today, of course, is my good friend Michael Carnaval. Well, you know, Michael, I'm thinking about some things. Mm-hmm. It seems in January there are two constants. And I think, you know, the National Football League, I'll begin with them, they have a great extravaganza that they run every January. They pick a couple of big weekends, and they get all the teams, and they play to see who gets the chance to play the Patriots in the Super Bowl.
Yeah.
Okay.
It seems that way.
Yeah. And then there's the market.
Yeah.
And they're both back.
Yeah. Both on
with
top
all
again.
the noise,
Oh, yeah.
all the faldera,
Yeah.
all the Brexits, and all
Yep.
the Italys, and all the Macedonias, and all the Trumperonis.
Yeah.
It's back.
It is a totally different picture than how it ended the year.
Yeah.
How it ended 2018.
So now you can open up the envelopes again.
It's going to be a good
bounce back.
Good statements to read this month compared to last month. But you're right. December was the worst December since the worst December since Great Depression in 1931. The market finished the year down 6%. And then, Bitcoin that everyone talked about was off 73% for the year. And then all of a sudden, January came, and now the market is back to 25,000.
Yeah.
And it's up 7% this month.
Yeah.
So, still down over the past 12, but really a very good rebound.
Well, when you look back at that period of time, look at the controversy.
Oh, yeah.
We had a government shutdown.
Oh, yeah. Yeah.
I mean, I saw some of the numbers. Even with the shutdown, our employment was up.
Yep. Yeah.
And so as a consequence, the economy's hanging on.
Still doing well.
Yeah.
Remarkably. Yeah.
And so with all the breaking news and all the and people wringing their hands.
Yeah.
I was watching before I came up, and I was watching one of the CNBC, and one of them, I think it was Steve, somebody was on, and he was saying that he did some capitulations, and he was saying it looks like they may even do a cutback on the interest rate by the end of the year.
That could happen, especially if things do ultimately slow down.
Yeah, and he said, don't be surprised, but he said, and he said, it's just, he said, and of course they don't know what to say.
Right.
And he said, I've been doing this for a long time.
Yeah.
I have to tell you, be honest, I don't know what's going on.
Mm-hmm. Yeah. No, that's true. I mean, that's exactly true. I mean, there were a couple of sayings there that, Santa Claus rally. Well, it did, last 3 trading days of the last year plus the first 2 of the next year. Usually an indication of whether things are going to be good or not, and it actually turned positive during those 5 days, so that was a plus. There's another saying, as January goes, so goes the year. January, it's going to be up about 7%, so that might bode well for the year. So things have changed a little bit. The interest rates, the 30-year Treasury over the past month has done nothing. Hasn't gone up, 3.01. And of course, with this big rally that we've had from the lows of around 21,500 to today at 25,000, you'd expect those technical indicators that I watched to weaken, and they all did. So not much to get too excited about.
Oh,
Everything's
and you know, and again,
played out as
we're
expected.
just chugging along, and then it still comes down to, okay, 7%. Now where you going to go?
You're right.
You're going to go get 1.5 at a
Right.
local institution?
Right.
Have a nice day.
Yeah. Oh, yeah.
You know.
And unfortunately, you know, we did see people, there was a bit of a panic in the tail end of December, and of course, always at the wrong time.
Yeah.
It just seems like maximum pessimism and the height of panic happens just before things turn.
Yeah.
And and it happened again. That's a good lesson to learn for the next time, I think, because
Yeah.
it's going to happen again at some point. And to try to remember that, hey, remember the previous time this happened, we got out,
Yeah.
and then it turned right around.
Yeah.
So,
Yeah, and you know, you wonder. You know, my dad used to always tell us when we were kids growing up, let me explain life to your son. He would say, life is making one mistake after another. Because that's how you learn, by making mistakes. Something happened in your life, first time it ever happened to you. So you had to make a judgment. Well, in this particular case, you made an error in judgment. Now, he said there's two kinds of people. There are those people who make that mistake, and they only make it once.
right.
And they learn from it. And they never, I'm not doing that. All right. And then he said, then there's the other kind of people. They make the mistake, and they say, gee. And that happens again, and they make the same mistake again. And they make it again. And then 4 times later, they still haven't figured out how come the result always is the same.
Right.
And they go through life having a miserable trip. Where the other fella makes his mistake, says, ha ha. So you'd think, after all these years,
Yeah.
that here we sit in 2019 at 24,982 or whatever it is
Yep.
right now. You would think by now they figured out it does come back.
Yeah.
You know?
I mean,
So don't jump.
That's right. And it's amazing, but you see it all happen over and
Yeah.
over again.
Yeah,
It's just kind of surprising,
yeah.
you know. But that's human nature, I guess.
Oh yeah, yeah.
A lot of things happened in January. Of course, we start off the new year. You know, the Pope reminded us, to forego greed and hoarding and materialism. And he said that, the interesting quote, he said, there's an insatiable greed marks all human history.
Yeah.
And that was kind of interesting at that time because that was at the bottom of the market
Oh yeah.
where, nobody was really happy about the money
No.
they supposedly lost.
That's right.
Yet that message really kind of geared toward, well, you're focusing too much
Yeah.
on
Things that don't matter.
things that really don't matter in the long run. I thought that was kind of interesting. First day of the new year of 2013, we had the biggest single-day point gain for the Dow. January 2nd, the Dow went up 1,086 points.
Yeah.
So, again, as you had mentioned a minute or two ago, the people that made the mistake,
Yep. Missed the
One-
jump. They were jumping in the pool.
Right.
Everybody else was swimming.
and that's exactly right. International Monetary Fund during the month downgraded global growth. They said, the world economy is slowing down. Probably no surprise there. As we're doing this show today, Italy announced they went into a recession.
Yeah.
So, I mean, there's obviously China, the growth is slowing down. There's no doubt things are slowing. But that in itself is not
No.
bad news.
No.
You can't have a record growth
All the time.
all
No,
the
no.
time. Well, let's see what else happened. Oh, Federal Reserve Board, the group that votes on interest rate policies, changes every year.
Yeah.
And our own Boston Fed President Eric Rosengreen has a vote on interest rate policy this year. So, it's always good to have the local
Oh, yeah.
person have a say. He
Well,
has,
but he better be careful because
Oh, yeah.
the president's got his fangs out for that,
Oh, yeah.
that gang of thieves over there. He's
Yeah.
not happy with Powell.
right, and he's had, Rosengreen has had the opinion that interest rates should keep going up. He's tempered that a little bit in the last couple of months, but he had been favoring
Yeah,
higher interest
yeah.
rates. So it'll be interesting to see. We have a new biggest company in the world. It's Amazon now.
Oh yeah.
2017, the largest publicly traded company was Apple.
Apple.
That got replaced last year by Microsoft,
Right.
and that got replaced this year by Amazon. And so, seeing, well, what does that all mean? Well, Amazon first issued stock in 1997. If you had put $10,000 in, you would have $10 million today. 20 years, 10,000 to 10 million. So, no wonder it's caused trouble to retail, to almost every other industry.
I saw, you mentioned that, and I saw an interesting article. I was looking through some things. I saw an interesting article about politicians' net worth.
Okay.
And I was flipping through it. I get to a guy named Al Gore. Now, he was never much of he was a vice president. He lost the election, and big climate control guy. He was always for that. By the way, he's right.
Yeah.
They all laughed at him. He was right. Anyway,
Yeah.
he's worth $200 million.
Yeah.
So I looked at the article, and he did a funny thing. He bought some Apple stock on the day it first came out,
There you go.
and it's now worth over $100 million.
Yeah.
Half of his, and then he bought, I forget the other one, but he bought two different ones. One was Apple,
Yeah.
and the other one was he just made an investment of some money that he had at the time, and he's now worth over $200 million. So those things happen. I mean,
They do.
But by the same token, goes back to my old friend Dan Keogh, the president of Coca-Cola. When I sat with him we were at a conference. I was doing a seminar, and he did a keynote address. Remember when he changed Coke?
Yeah.
And he was the guest speaker. And of course, everybody said he made a huge mistake. Brought out that secondary product, and we're sitting after the thing, and I said, "Can I chat with you?" Sure. So we're talking, and he tells me, I said, Dan, I said, I know you get up and play with these people, but he says, I did a little research. Well, he's looking at me. What do you mean? I said, well, I found out that you fellas can 3 million cans of Coca-Cola a day around the country, in all your different places where you. He says, yeah, that's about right. And I said, you brought out this product, and it didn't go over well because Pepsi was getting too close to you. And 3.5 weeks later, with a brand new can, I also found out it takes anywhere from 3 to 6 months to design a can.
Okay.
And it's flat. And it rolls, and they bend it, and they put the top on it. And I said, just 3.5, just to design the new can. So 4 weeks and 3 days later, you admit you made a huge mistake, that the new Coke isn't good as the old Coke, and you're bringing back the old Coke. And it's all planned. And he looked at me kind of funny. I said, you couldn't have done it in 3 weeks. You couldn't have made the cans, couldn't have had them ready, all new with the little swoop there on them, and bring it back out. And I submit to you that you purposely made
Oh, I see. Okay.
an inferior product,
Yeah.
did it, and then brought it back. And your
Increased
sales
demand,
skyrocketed, and Pepsi's gone. And he started to laugh. He put his hands in his pocket, and he took out a pair of dice, and he handed it to me. He said, here you go. And I have them home. He gave me a pair of dice. And he says, Dick, sometimes you got to roll those dice. And you better hope it comes up 7-Eleven.
Yeah. Yeah.
And he laughed, you
Yeah.
know. And he says, well, I can't confirm or deny that.
Right. Sure.
But I mean, the point was, and everybody called him an idiot and everything else.
Yeah.
Save the company.
Yeah. Yeah.
Yeah. And so a lot of times, some of these guys are really,
Oh yeah.
they're geniuses.
He manufactured demand.
Yeah, and I said, and he said, and he gave me those, and he says, sometimes you just got to roll those dice. And he says, and then he chuckled, and he said, believe me, he said, that wasn't easy.
Oh, sure.
He says, I had people on my board, they were ready I was gone. I was out of work. They thought I was nuts, And, but, it's what it is.
It is.
Hey, Apple could have bombed.
Absolutely. So, and to have known, go
Who would have
hindsight's-
ever thought that a company like Amazon
Absolutely.
could do what they did?
Right. The only way you can be involved in something like that is, as I think, you have to have intimate knowledge in the technology of what they're doing. And,
Now they got
and
little cops that are going to drive down the street and deliver your packages.
right.
Now think about it.
Now,
If the post office is done,
in 20 years to 10 years,
they could be out of business.
they could be out of business.
Remember Bradley's?
Oh, yeah. Hey, Bradley's, Ames, Caldor, France, Woolworths, the list is...
Yeah, it goes on and on.
I mean, there's we'd be
Sears.
Here, yeah, we'd be here till
Yeah.
till
So it
nighttime.
Yeah.
Yeah.
You know?
Amazing. Eastman Kodak. I mean,
Yeah.
companies who would you, it never. Eastman Kodak.
It was a huge.
They had all the patents.
They controlled everything.
They had all the patents, and in the end, because they couldn't foresee the future,
No,
they're gone.
they're gone. Yep, they stuck. Hey, we had one right in Southbridge.
Okay.
American Optical
Oh,
Company.
yes, yes.
They stuck with glass when everybody else was going to synthetics and plastics, and they know glass is the answer.
Yeah,
It's all over but the cheering.
it's all gone now.
Yep. See ya.
Yeah, it's amazing. But you have to understand that, that technology and stuff, and I didn't, and I'm sure the average person didn't.
No.
But it's kind of fun to look back to
Oh,
what
yeah.
could have.
What could have been?
We wouldn't be sitting here at
No,
10 degrees.
If I had put, never mind 10,000, put 1,000.
Yeah, that's right.
1,000 in Apple.
That's right.
I'd have done a grand.
That's right.
If someone told me what it was going to be like.
Of course, of course. I mean, who knew?
Yeah, I don't want to be worth 50 million. Isn't that too bad?
That's too bad. Yeah.
And by the way, you know what makes me laugh? It goes back to these, we talked a little bit about football. Some of these fellas, they cannot live long enough
Oh, to spend the money. Yes, that's good. Yeah.
I mean, like David Ortiz, and I don't take anything away from him, but $14 million a year. He can't live long. There's only so, his ears are only so big.
That's right.
He only can put so many diamonds on them. They can only wear so many chains.
His driveway is only so long.
Yeah. I mean, there's only so much.
Yeah.
He can't live. He's got 2 kids.
Yeah.
Now, in the good side of that, he and guys like Martinez and those fellas, they're down in the Dominican and they're building schools and they're helping their own own folks, which is great. Don't get me wrong, but you hear some of these exorbitant holding out for an extra $2 million. They can't.
They can spend what they have.
What are they going to do with it?
Yeah. And is anybody worth?
That kind of. Well, we see Dabrowski.
Yeah.
I'm not going to pay somebody 6 years and pay him, $20 million a year for 6 years when I don't know if he can last that long.
Yeah.
We saw what happened to the poor Yankees doing
Oh
it.
yeah.
I mean,
Somehow
look
they
at
survived,
Ellsbury.
but
Look at Ellsbury cost them.
yeah. Yes.
So
Then we talk about, interest rates. Canada, our own Federal Reserve, Canada, and the European Central Bank all met in January. All three decided not to do anything with interest rates. So it's possible interest rates may not be going up much more. We had the government shutdown, and everybody said how bad that was. But an interesting fact, seems like every time there's a government shutdown, a year later, the stock market is higher. I don't know what that means, but in 93, a year later, the market was up 9%. In 95, it was up 22. 96 after that shutdown was up 21%. So just because the government shutdown cost the economy a lot of money, history doesn't say it has any long-term
in
effect.
fact, no, it doesn't.
No.
And in fact, if it just comes back at half of those numbers,
Yeah, you're fine.
22, half of 22 is 11. I'll take
Absolutely.
that tomorrow.
Absolutely. Oil seems to have stabilized, in above $50.
Yeah. Before I left, it was down to about 20 cents today.
Okay.
But
It's not getting the wild swings it.
no, it did. It's kind of holding, which is good, by the way, too. Because some days you see the pump up. The thing you got to be careful of, I got a kick out of it. They got these big signs, 233. Well, I use 91.
Okay.
And you go in 91, that's 285.
Yeah.
They didn't bring those
No,
down.
they don't bring the high end.
They don't touch those down.
No.
And so but it's okay.
But no, the 83 is relatively cheap now.
Oh yeah.
know?
Oh yeah. But the other thing too, I saw a thing. Auto sales were down in January 2.5%.
Okay.
They're giving them away. They're begging you.
Yeah.
They're begging you.
Yeah.
They got inventory that's. I mean, they're still peddling 2018s.
Yeah.
That they, and of course, I mean, you drive by on Route 20 there,
Oh.
and it's got that big hill that they just.
Full of
that's got $4 or $5 million of inventory up there.
Yeah.
And you say, how's he going to sell?
Well, how are they going to sell them all?
Yeah.
And what do they do if they don't sell them? Do they just crush them?
No, they just they'll sell them.
Yeah.
They'll just.
There's a lot there.
Oh yeah, but again, that's the good news.
Yeah.
I mean, I see a thing today. I think it's BMW, the high-end guys. They're all running now in 0.9% on certain models.
Yeah.
The stuff they got, boom.
Yeah.
You know, they'll
They'll give it to you.
give it to you. You know,
Yeah.
and you get a 0.9, and then some of them are a 1.9.
Okay.
You know, and again, you know what it goes back to though, Michael, is take care of your credit.
Well, there's the key. Yeah,
You
'cause
know,
those are
take care of
those
your
rates are only good if you can qualify.
Yeah, qualify for them. They're going to give you somebody who walks in with a 620. You know, and I was talking to a fellow the other day. I'm looking for a car for my wife, and I was talking to a fellow, and he raised with me. Well, you know, you got to be able to. You know, I said, how's 844 sound to you? And the guy's, what? I said, I'm going to tell you how much I'm going to pay.
Yeah.
You're not going to tell me. He looked at me, you know,
Okay.
and I said, yeah, you know the guy in the F&I room? I'm a dream. And the guy started to laugh.
Yeah.
But it's true.
Yeah. There's a lot of deals and a lot of opportunities.
And people get excited, you know, they see these ads,
Yeah.
and they run in, and there's a little disclaimer.
Oh, yeah.
Must qualify.
Right.
You know.
Right.
And people don't realize it.
No.
Otherwise,
no,
it's
they
4, 5, 6% now.
Oh, yeah. No, that's historic standard. That's still low, but
Oh, yeah, but
relatively speaking.
yeah.
You know, I mean, you know, then we look at, you know, before we wrap up the major news, we look at, you know, the sports scene, kind of mixed there. You know, Clemson won the national
Yeah.
college football championships. That's good because the prior 2 times they did it, the Dow had an average gain of 23%.
Ah,
We know there's no direct correlation,
No.
of course, to football and
No.
stock prices, but it's fun to look at. That's good because the upcoming Super Bowl, none of the numbers look good. You know, the stock market in general is up 2/3 of the time, so it's up about 66% of the time. So there's 4 factors on this year's Super Bowl, right? If we look at number 1, 2 times it's been played in Atlanta. The average return for the Dow was -2% for that year. Then we got, of course, the times the Patriots win the Super Bowl. Market's been only up 40% of the time that's happened, for an average gain of 2% a year. When the Patriots lose the Super Bowl, actually that's better. The Dow is up an average 60% of the time, for an average return of 3%. Rams win the Super Bowl, you know, the market went down the time they did 6%. When a team from Los Angeles wins the Super Bowl, because you had the Raiders,
Yeah.
the market was down an average of 4%.
So no matter what happens,
And the last time the Rams and the Patriots played in the Super Bowl, 2002, that year the Dow dropped 17%.
wow.
So no matter where you look at it,
Yeah, it's
there's
not-
no good news.
no good news
There's no
there.
good news here. So just, you know, enjoy the ball.
Yeah, have a good.
And
Don't worry
nothing-
about the
nothing-
market.
Nothing's going to happen
No.
good, at least from the market standpoint. Of course, then we like to look at the economy, and really nothing's changed. You know, inflation
No.
is remains very low. You had some deflation, meaning prices actually fell in December, but you know some of that might have been tied to the government shutdown.
Oh yeah.
But inflation remains, for the most part, below the Fed's target range of 2%. And that's probably why there may not be many
No.
interest rate
No,
hikes.
as long as it stays down there.
As long as it stays down there. Leading economic indicators, that was negative in December, but again, you had to figure in the government shutdown.
Yeah.
The bad thing with that number is 2 of the last 3 months have been negative. And sort of history shows that if you get 3 negative months in a row, that usually signals the start of a recession. So the people who are saying, hey, things are slowing down, and we saw the International Monetary Fund cut the growth forecast for the global economy, and there's something to that, because things
Yeah.
are slowing down. Jobless claims, 204 straight weeks under 300,000. I mean, that's, you know, it's unheard of. We saw in January, 1 week was the lowest since November 1969, when it was only 199,000 layoffs.
Claim, yeah.
You got to remember, right? You got to take into fact that the labor market was a lot smaller than it was today,
yeah,
or
yeah.
40 years ago than it
Oh,
was
yeah.
50 years ago than it was
Yeah,
today.
yeah.
Hard to believe 1969
Yeah.
was 50 years ago.
Yeah.
I guess it is, right? That's just that's just amazing. And long-term unemployment, which is people out of work more than 26 weeks, has been under 2 million for 93 straight weeks. You know, it's almost 2 years.
Yeah, I mean, it's incredible.
It is. I mean, a lot of good stuff happening, and although things are slowing down, it's, you know, they're slowing down slowly.
But by the same token, the slowdown could actually be helpful.
Oh, well, yeah, definitely.
I mean, if it's slowing down, that means when I finally, sometime between now and when I find the car that I want, I'm going to be able to make a better deal.
That's right.
And then if I can, you know, save a couple of grand because they want to get that thing out of there, then that's to my advantage.
Yep.
And as a consumer, I just saved myself a couple of $1,000
Yeah.
on a car that I would have probably paid the $2,000 to get a year ago.
Right.
You know, or whatever. And so it's and what I like to do is I'm one of these. I was talking to a person today, and I said, look, call MB and get a hold of MB Financial. Why would I call them? They lease automobiles. See if anything's coming off a lease with really low mileage that I can scoop up. They have cars coming off a lease every day.
Oh, yeah.
You know, I said, and they have to move those. You know, and I said, see what they got. Oh, what a great idea. I mean, I'm telling the guy how to do it.
Yeah. Yeah.
What a great idea.
Yeah.
Okay, I know who I'm talking to.
Right.
You know.
Right.
But there's opportunities out
Oh, yeah.
there.
Yeah.
You know, and you can pick one up with 5,000 or 6,000 or 7,000 miles on it.
Oh, yeah.
You know, and then it's not a new car, even though it really is.
Essentially, it is.
It's registered as a used vehicle. Save money in your excise tax, sales tax, the whole everything back right down the line.
Yeah.
So it's it's not bad that things are kind of a
No,
little tight.
no. I mean, as long as, you know, what you don't want is interest rates
Yeah.
rising rapidly,
Oh, yeah.
inflation coming back.
Oh yeah.
And that does not seem to be, I mean, that does not seem to be the case,
No.
you know?
So,
You know, January was sort of, in the history of all the months, sort of a middling month for performance. February is the same way, ranks 8th of the 12 months
Yeah.
in performance since 1950. We've had a big rally, obviously, we talked about today in the stock prices for January. Odds are that can't continue into February. So, you know, the technical indicators are weaker. We've had a good run.
yeah.
You know, maybe February nothing happens.
Yeah. Slide through.
Slide through. And but more important, if it does drop, try to remember what happened in December.
Yeah.
And not.
Yeah. I mean,
Repeat
I
the
think
same thing.
I think the biggest thing, Michael, is, and we talked about it earlier, is learn from experience. I used to have when I would be working at my businesses, I would say, look, I want you to go to school on my experience, and they'd look at me. I'd say, listen carefully to me. I've done this now for 32 years. Well, let me tell you how this works. You know, and you can't beat experience.
No, you can't.
It's a learning process.
Yep.
And if you learn from those things, you know, and here's a classic example: learn from the experience.
Yeah.
The market comes back.
It comes back.
And here we sit in 20. And if you don't think so, here we sit in 2019, January 31st. It's 24,009 and pennies.
Right.
And yet we look back and say, oh, okay, you know, here we are. You know, and we had this ride.
Yep.
You know, and we can all look back to 6066.
Of course.
Somewhere back there in
Of course.
09 or 08, whatever it was.
Yeah, and now 09, yeah.
Yeah.
Right.
And here we sit. I mean, that's from 6 to 24. That sounds like a pretty good jump.
Yeah. But, you know, like with the credit scores and stuff, you know, you got to sort of live within the means and
Yep.
to be able to not panic.
Well, I think the biggest single thing, and I guess it's an experience and you'll learn from it. The biggest single thing is pay your credit card
Yeah.
balance every month. It's all you have to do
Yeah.
is just pay the balance. And if you want to buy something, and you know you're already up to $500 or $600, and that's your limit, then put it off till the next month.
Yeah.
Don't, because then you're going to have to carry it. Now they get you for 22%, you know, and they
Outrageous,
croak you,
yeah.
you know.
And you're right. I mean, if you don't pay it every month, then you're obviously living beyond the means.
You're in trouble.
Right.
You're in trouble.
And it's very easy to correct it.
And then the
Just
vultures are
immediately
waiting.
start.
Call
Oh,
us.
they are.
We'll help you.
Of course.
Yeah,
Oh,
they'll
yeah.
help you.
Oh,
Sure
yeah.
they will.
Yeah.
You know,
Absolutely.
my father used to say all the time, "I'll help you out. How'd you get in?"
Yeah.
you know, you know, and,
Yeah. Yeah.
and that's the way it is.
That's true.
And it's what it comes down to.
That's
well,
true.
Michael, once again, another great program, and we had some insight for folks, and give you an opportunity to see where things are. But again, you know, if you play it straight, you don't panic, and you just go by your experiences, you're going to be fine.
You usually come out ahead.
You will. Michael, once again, thank you very much. And there you are, folks,
you.
and other conversations with